Welcome. We are joined by John Heneghan, the president of Last Leaf Ventures, joining us from Chicago. Thanks for being with us.
Pleasure to be here, Dave. I'm from Aurora, so 40 miles out, the City of Lights, Wayne's World.
There you go.
And yeah, good to be with you and talk to you about Promised Land Opportunity Zone Fund and what we're doing in opportunity zones across rural America.
And before we dive into this, one of the things I always like to kind of get into is the why. You're an accounting guy, right? Accounting major back in college a couple years ago.
Yes, University of Illinois, accountant. And then I got involved in investing. So, oh, 2005, I started working for a guy named Samuel Zell, who's since passed last May, but a great investor, a billionaire. He made a lot of his wealth in real estate.
I worked for one of his companies back in the day, actually. One of
Oh
his
yeah.
broadcast companies. I did.
Oh yeah, sure. J-Core, right? The
Uh,
radio broadcast.
it was TV, but
Oh, it's TV.
yeah,
Okay, all right.
one of his enterprises. But yeah, definitely a well-known figure.
Yeah. And so I managed alternative investments for him, so private equity and hedge funds. And so, I got the opportunity to learn the investment process at the knee of one of the greats.
And so is it the numbers? Like, what's the connection? Like, as a kid, what were you thinking about you wanted to get into? Because to me, as an outsider, it feels like
Oh,
you've got a connection of numbers here from one career to the next. What is it?
yeah. So my dad was a bean counter accountant, and so my brother and I both got into accounting, studied accounting, and then my brother Tom worked for Sam first, and he had a gig at a corporate entity that he didn't want to do any longer. He wanted to do deals, and Sam said, "Fine, just get somebody to take your seat." He says, "Well, my brother knows insurance. It was an insurance entity." He said, "Fine, get your brother to take your seat, and you can do your deals." So the both of us worked for Sam. My brother's still working for him. I worked for him for 13 years, from 2005 to 2018.
Nice. All right. So how did you this the opportunity zone fund here, the Promised Land? How did you get involved in that?
So when it was time to sort of tap out at Equity Group, I was working with another family office. So opportunity zone legislation was passed in 2017, and this other family office, was interested in opportunity zone investing. And so they basically said, go find us a deal. So I spent some time, and mostly in 2018, looking at funds and projects, and didn't really find the right kind of deal. And then migrated to farmland. Someone had asked, can you do farmland in an OZ? And I'm a little geekish, so I dug into the regulations, and there was a little language in there about farmland, and it's actually easier to do farmland. You have to improve the the real estate that you purchase within a qualified opportunity zone fund, and that is funded by capital gains from investors. Uh, and to get the tax benefit, the biggest of which is on a 10-year hold, the second gain over the 10-year hold, you don't pay capital gains tax on. But to get that benefit, you have to improve the farmland in our case. And so what we're doing is drainage tile, grain bin storage, and irrigation. You have to improve it by more than an insubstantial amount, is the language. If there's a building there, you have to double the basis of the building. So quite a lot more development in traditional real estate, multifamily or office or retail. Farmland, it tends to be 10 to 30% of the value of the farmland you have to do in improvements to meet the test.
And there are so many different types of these opportunity zones. You have, for outside of farmland space, you have communities that use it on a local level, and they may call it something different, but usually it's the tax structure, and it's really all, you go into a tougher to develop area, and whatever the project is, some of them use it for a mall or what have you, a shopping zone, a residential area, whatever it is. When you deal specifically with farmland, what types, what is it about the area, that makes it distressed, that makes it qualified for this?
Okay, yeah, great question. So there's 8,700 opportunity zones across the US. Most of them are urban area. I think it's 30-40% is in rural America. And those opportunity zones are census tracts. And each governor of each state had the ability to nominate certain number of census tracts in their bottom quartile based on socioeconomic factors. Average annual income is probably the biggest. And so when it gets to rural America, you could have low average income, but high quality farmland. So in our first fund, we invested in 12 farms. 6 were in Illinois, high quality farmland in the middle of the Corn Belt. 3 were in South Carolina, 2 in Mississippi, and then our centerpiece farm is in North Carolina, where we invested in 4,500 acre farm, large scale farm, where we built a 350 bushel grain bin system for that farm.
So as you're looking at these different metrics, then there can be a flip. So let's say the farmland could be high quality, but it's more the economic factors of the community that would make it eligible. And then, if I'm following this right, and then it
Yes,
could be
yeah.
the converse, the other way around, where maybe the farmland's not as high quality, but the economic side is the tougher climb. Is that right?
Yeah, so some of it's great farmland. It just happens that there's no other businesses in that area,
To support
to
it.
speak, yeah, to support it. So employment's probably the biggest issues. So Central Illinois, take Champaign. So the community around Champaign is generally not in a opportunity zone. But then when you
Yeah,
go
you got the
further
university
out,
there, educated
yeah, right.
workforce. Is
You
that what
got
you
the
mean?
university for employment, you got healthcare, you've got some venture capital, technology, real estate concerns, and investment concerns. But then further out, there's not that opportunity to commute. And so the average incomes are lower, and high quality farmland will qualify
Will you dig
because of.
into that? Sorry, will you dig into that North Carolina project? So you're really deep into that, kind of finishing it up in the fall. How did you identify that region, and then what did you have to do to it to qualify?
So that North Carolina farm was owned by another institution, Farmland Fund, and it was at the end of their life, so it came on the market. Our partner in this endeavor, because I'm an accountant by trade, as we talked about earlier, and Sam taught all of the people who work for him. You don't have to be an expert at everything. Be smart enough to get experts involved. So we partnered with Farmland Partners, and they're our property manager on Fund One. And so they sourced and underwrote the deal in North Carolina. Um, and that was interesting. There was bins on the farm, but they were on the eastern part of the farm and they were close to the coast. So they were subject to uh, storms, coastal hurricanes and stuff, and flooding, lower elevation. So we moved the bins to the center track, and built a 350 bushel system that can handle the production on 4,500 acres.
And this was still an active farm?
Yes, yes. So we, Farmland Partners found a tenant for the farm. We got a nice market rental rate, told him we were going to improve it. And he's like, and this guy manages, I think, 30,000 acres in North Carolina. And so with his connections, he can store and manage when he sells his corn or soy. And he's got a relationship with a livestock company in North Carolina, and he gets a nice price above market because he's a steady supply of feed for I think it's a pig farm.
And how big are you talking about here? How big is this operation that's part of this OZ?
That's 4,500 acres, and one of the things we talked about earlier was so North Carolina has a program to sort of preserve farmland. The state of North Carolina has a farmland preservation department, and they've partnered with the military, in this case, the Navy that's in the area. And what they do is basically to keep farmland, they will pay you the fair value through an appraisal process of for the development rights on the farmland. So the military knows that they can continue to do their exercises over the land, and they don't have to worry about windmills or solar arrays reflecting in the pilot's eyes or things like that. So we entered into a conservation easement. That's the term used for the payment of the developments, the purchase of the development rights on the eastern 1,200 acres. So we were able to sort of monetize that, the eco services, the natural capital portion of the farm, and still maintain its ability to generate income from farm rent and appreciation potential on the farm.
As you all first start, as you get interest in an area, what is what's the reaction from the local folks who are already there? Do they understand what the game plan is? Are they hesitant hearing, wondering who the heck are these guys? What are they trying to do? What the heck's an opportunity zone? Or, is there familiarity there? How do you build that trust about, hey, here's what we're trying to do?
It's an education process. And I think it's probably the exception where the local community knows that it's an opportunity zone. And so it's an education process. We spoke earlier, we were at the Land Investment Expo in Des Moines, and we had a booth. And I swear there must have been a dozen people that came by, saw our little banner and said, opportunity zone, what is this? They engage in a conversation. We look up where their farm is located, and more often than not, there was a neighbor opportunity zone and high quality farmland nearby. And so it's difficult to get the word out. We like to say that we're the leading rural development partner for American farming communities in opportunity zones. It's because there's not that much competition. We're the only one. And we're really one of the few that is investing in rural American opportunity zones.
Although I think I have a feeling if anybody from USDA was part of our conversation, they're like, hey, wait a minute, we're doing stuff too.
Yeah, I'm sure. Yeah, I mean, they're trying to promote the rural communities as well. The Inflation Reduction Act had quite a bit of money in that for rural communities and development projects.
Okay, so talk about DC because as you look at expansion and what have you, you are dependent on some congressional action, right? For a variety of things that you're interested in. That is not the most organized place on the face of the earth here right now, right? So how are you engaging with that?
Yeah, so it's patience, it's trying our patience. So 2017 Act, so one of the benefits, in addition to the tax-free appreciation on a 10-year hold, there's a deferral element, and the investor puts the capital gain into a qualified opportunity zone fund. They don't have to pay the tax that would otherwise be due with the next return until 2027. So 2026 return filed in 27, they pay that capital gains tax. There's legislation, it's called extension legislation, that'll move that deferral date from 26 out to 28. And because Washington takes a lot of time to pass stuff, they'll probably have to move it out further. And that'll make it more interesting, I think, catalyze interest, because a lot of folks, there's step up basis. If you put your money in and you hold for 5 years, you get a 10% step up on the gain. So you only pay tax on capital gains tax on 90%. And if you're held for 7 years before that deferral date, then you only pay 85%. There's another 5%. So that would catalyze interest in farmland, I think, and residential apartment buildings in urban areas. There's a special legislation in the House of Ways Committee, along with the extension legislation that would create, excuse me, it would create,
Congress will have a way of choking up people. That's understandable right now.
it would create 2,000 rural OZs. And some of, I think, 700 overlap with existing. But for those 2,000 OZs, you get all of the tax benefits of the traditional, but the deferral is 2032. So you roll it in today and you got, you know, 9 years of deferral.
What would the impact of this be to expand this that much? What kind of national scope would this have if they could get that through?
The General Accounting Office scored that proposal, and they had a cost of $1 billion, $1 billion. So in my mind, that's like rounding. The Pentagon loses that every day, probably, right? They can't they can't conduct satisfy an audit of the Pentagon. So $1 billion, why can't you just pass it, and then some additional money will flow to rural America, which you talked earlier. This is the breadbasket. We need food to feed our people and the world. We're one of the most productive nations in terms of food production.
So how instrumental, as you look at so many of our rural areas are shrinking, and it's for a variety of reasons, but to have this type of investment potentially in those communities, how does that play out, do you see, in the years ahead, if this could actually get through?
So there's a lot of infrastructure, and I'm not an expert on, but a lot of it's dated and needs to be improved. Some of the deals that we're looking at currently are for renovating existing grain bin facilities or building new grain processing facilities. And some of it's for organic grains, which have to be segregated. They can't be mixed with conventional grains. And so there's a separate infrastructure build out for organic to the extent that market continues to grow.
Which is a big one-time cost, right? I mean, that's what makes it so challenging.
Right. Yes. Financing that, right. And there's similar dynamic in, and I don't know it as well, but cold storage. A lot of the cold storage for the US food system was built in the 50s, and it's past its useful life. So there's folks that are trying to renovate, rebuild that infrastructure at modern standards, more energy efficient, right? Um, more productive throughput for today's higher ceilings. Trucking processing is faster, more efficient, lower fuel costs, the whole 9 yards.
Who's been attracted to be a part of this? Are there certain type of investors that are particularly interested? Are they people who had some kind of either direct or tangential early life connection to farmland? Like, who are these folks?
Yeah, yes, you're very insightful, Dave. So yeah, I worked for Sam. So initially, I started pitching Farmland OZ to family offices, wealthy individuals in Chicago, New York, Los Angeles, and they're like, well, "We don't know farmland, well, we're not going to start." So it only took 15 months. But the folks like in Des Moines and Champaign, wealthy communities that grew up in ag and understand the importance of ag, that's our sort of sweet spot for investors. So we've got a hedge fund and a couple family offices that are in the energy commodity space, so they get it. And there's the overlap between farm production, crops, and energy, right? Those two markets are merging as we try to do sustainable aviation fuel and some of those other things.
And without the build out, I mean, these folks are in these smaller communities where there, in a lot of cases, there aren't a heck of a lot of people, available workforce. Technology can maybe make up for some of the for to do some of the work here, but that would seem to be a pretty big challenge as they try to build out. You got to have people.
Um, yeah, and farmland is a beneficiary of all the technology, right? So precision ag equipment, right? You need fewer workers. It's all automated in terms of planting and harvesting. And then you've got the improvements in hybrids and seed technology. So the landowner benefits from those types of things. And there's other optionality with wind and solar, to the extent you're a landowner and you believe that that's a good use of your farmland. Personally, I would marginal farmland. It's great for wind well, wind doesn't disturb. We've got one wind farm, doesn't disturb 160 acre farm in central Illinois, doesn't disturb the ag aspect of it. It took a few acres out of production. But yeah, technology is a boon for farmland and farm production. And I think that's how we'll be able to, because it's shrinking farmland as development occurs. So we've got fewer acres of farmland and we got more people to feed. But I think human societies have proven that we can figure it out. There's no need to like encourage people to meet their maker. We'll figure it out if there's enough ingenuity. The U.S. farmer and farm industry will figure out how to feed the millions and billions of people.
And you're the self-professed and self-confessed here numbers guy. And just on the most basic level, like we were talking about before we started this recorded part of the conversation, the bottom line is that population's getting bigger, the available farmland is getting smaller every year in our country. So how do you stress that? You talked about part of what you're doing is educating people, whether it's folks who might be who might find themselves living in an OZ, but maybe it's an investor, but just to the general broader population, if you will, that concept about underscoring the importance of our population's going up, the farmland's going down. That's a big global challenge for us going forward. How do you underscore the relevance and urgency of that to people?
I think there's a lot of people waking up to the farmland asset class. So it's a $3 trillion market just in the US. And less than, I want to say 2% is institutionally held. So in promised land or there's TIA CREF has Nuveen has a farmland fund. There's most of the insurance companies have farmland funds or invest on their own balance sheet. There's two REITs, Farmland Partners and Gladstone. So it's a non-institutional asset class that Sam Zell would teach you is gonna institutionalize over time. It's more efficient for institutions to hold the farmland and rent it out than for multi-generational farming families, because then it gets inefficient over time, right? You got two brothers and two sisters, and then they split, right? Who farms the farmland? I think the solution is let somebody else own it, right? Institutionalize it over time, and then you become more efficient, and you be able to feed a growing population. So Sam was involved in manufactured home communities, starting in I guess it was the 1980s, and it was not an institutional asset class. It was viewed as trailer parks. Who would invest in trailer parks? Well, he invested in retirement communities that were manufactured homes, and they're in beautiful locations that people would want to live, and it could live affordably. And that he took that public. It's Equity Lifestyle Properties. It's the best performing REIT stock since it was listed, and that asset class got institutionalized.
In this conversation, you've probably referenced Sam Zell about a half dozen times. That would appear to me that you have quite a level of fondness
Oh yeah,
for his business leadership. What was it about that guy?
I just foresight. He saw trends advance. Um, he may not be the first to figure out the sort of they call him the grandfather of the REIT. He didn't create, but he like he says he made it sing. He listed three REITs: an office REIT, apartment REIT, and Equity Lifestyle. And he created this institutional asset class, at least in the US. And to him, liquidity was value. It created value for a society, for investors, kind of thing.
Well, John, it's been good to talk to you. Appreciate the deep dive into this.
Yeah, it's a pleasure, Dave. And if anybody's interested in investing in Promised Land, we have a website, promisedland.fund. And we're interested in talking to anybody interested in hearing what we're doing.
Thanks. We appreciate it.
All right. Thank you, Dave.